Hello and welcome to Bitunix, the world's fastest growing crypto and derivatives exchange. Today, we're going to be looking at how to trade crypto on the platform and showing you the differences between the two ways to do so. So the first way to trade is using the spot tab up here on our navigation window. So the main differences are the spot tab and the futures tab. So on spot, you can do a limit order or a market order. And this is you physically buying the asset. So let's say BTC USDT. If I buy 10 USDT worth, this automatically gets added into my wallet up here. And as you can see in the spot account, we have that $10 worth of Bitcoin. So when you purchase anything on the spot tab, you don't have to pay any type of funding fee or any other type of fee other than a maker and a taker fee, which is just the fee for purchasing it off the order book. After you purchase it off the order book, it can sit in your wallet unaffected for years and years, and you can just wait as the price appreciates. You can also send it off the platform if you would like. So spot trading is great because you don't have to pay any other fees except when you buy it and when you sell it. So the only downside is you have to buy the full amount using your capital. Now, what do I mean by that? On the contrary, on the futures tab, I could also buy Bitcoin as a long position. However, when I do purchase the actual Bitcoin, for example, let's say I enter in a long position like this, also using $10 of margin. As you can see, there's a realized P&L here of minus 46 cents. So I have to pay a fee to open the position, and I also have to pay a funding rate. So the funding rate is right here, and it's every 8 hours. So as you can see, there's 4 hours left until I will have to pay a small, 0.01% funding fee on the actual margin balance itself. So if I wanted to hold this position long term, it wouldn't really make sense for me to use futures. It would make more sense for me to use spot. Futures is great for short-term trading and it can be very profitable. But if you just want to buy and hold, I recommend using spot. Now, also just to let you know, this funding fee, this is standard on all exchanges. It is not just on Bitunix. And Bitunix actually has lower funding rates than most other exchanges. So the other thing that you can do on the futures tab versus the spot tab is you can actually short. So I can open with 10 USDT, a short position, and a short position is essentially betting that the price of the underlying asset will go down. So as you can see, I just opened that position and we're in the red because Bitcoin is going up. That's totally fine. I hope Bitcoin does go up. But if you go back to the spot tab, you can see there's only buying and selling. There's no shorting, which means betting on the price to go down. The other thing you can do with spot is if you already have the spot asset, you can set a limit order to sell that spot asset. For example, if I have my Bitcoin, I can do a limit order to sell at 90,000 USDT. Oops. And I can slide this all the way. And now when the price hits $90,000, it will sell my spot Bitcoin that I just purchased. And so if you have a lot of spot, you can actually pre-plan all your sells all the way up to your higher price targets. Let's close this short because I think Bitcoin is going to go up. So those are the main differences between spot and futures. Spot is great if you want to buy some altcoins and hold them for a while. Or check out this little 24-hour change. We have this coin called IO, and it's up 33%. So if you have altcoins which are a little more risky and you don't want to use futures, you can swing trade, buy some altcoins that are low, wait for them to pump, 30%, and you can sell them like this. I know a lot of people that like to do just spot trades, and they're very successful in that. Or if you wanted to do more short-term trades, you can do so using futures. You can also do more longer-term trades using futures, but one thing that you need to keep in mind is there's also a liquidation price. If you do it properly, you shouldn't have to worry about the liquidation price. Well, that is something to consider when trading futures. And on the contrary, spot has no liquidation price. You can hold that asset to zero if that happens, hopefully not, but you don't have to ever sell it. The liquidation on the futures side would force you to sell out of that position, and you would lose the money associated with that position. So I hope you understand the differences between the futures and the spot trading, and I hope you come trade with us on Bitunix and come check it out for yourself.